Thank you, Neera. Good morning, everyone. On behalf of Progressive Shares, I welcome you all to the Q3 and 9 months FY24 post-earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company as of the date of this call. These statements are not guarantee of future performance and involve risk and uncertainties that are difficult to predict. I now invite Mr. Amit Sharma for the opening remarks, to be followed by a question and answer session. Over to you, sir.
Thank you, Poonam. Good morning, everyone, and thank you for joining us today to discuss the unaudited financial performance for the quarter and 9 months ended 31st December 2023 of Salzer Electronics. I have with me Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. P. Sivakumar, Assistant Vice President, Marketing, Mr. P. B. Ballari, Assistant Vice President, Business Development, Mrs. R. Menaka, General Manager, Accounts, Mr. K. M. Murugesh, Company Secretary, Mr. Jitendra Vakharia, Director, KC Industries, and Mr. Raman, COO, KC Industries. I shall take you through the consolidated financial performance of the quarter and 9 months ended December 2023 now. During the third quarter, we achieved a 10% year-on-year growth in sales revenue, demonstrating the underlying strength of our business. Revenues increased to rupees 270.35 crores from rupees 245.60 crores in the previous corresponding period. This growth was driven by wires and cable and industrial switchgear businesses. Growth in the sector led to demand for products like building wires and agri cables, which contributed to the most of this increase. However, sequentially there is a decline of 4% compared to the previous quarter, reason being our OEM sales slowing down and our exports also declining by 30%. EBITDA excluding other income saw an impressive growth, increasing by 25% year-on-year and 17% quarter-on-quarter. EBITDA was at rupees 31.02 crore in Q3 FY24 as against rupees 24.90 crore in Q3 FY23. The EBITDA margin for the quarter stood at 11.48%, up from 10% a year ago, mainly on account of reduced material costs in switchgear business division. The profit after tax grew by nearly 28.11% YOY to rupees 13.48 crore in Q3 FY24. PAT margins also improved 1.3% compared to previous quarter and 700 basis points compared to previous year. Coming to our 9-month financial performance, in the 9 months ended December 2023, net revenue in 9 months FY24 stood at rupees 839.74 crore as against 734.36 crore in 9M FY23. A YY growth of 14.35% driven by business from industrial switchgear and wires and cable segment. The EBITDA, which is excluding the other income, stood at rupees 83.90 crore in 9M FY24 as against 71.23 crore in 9M FY23, a growth of 17.78%, mainly on account of reduced raw material prices as well as increase in sales price. The EBITDA margin at 9.99% saw an increase of 29 basis points for the 9 months. The profit after tax was at rupees 33.75 crore in 9M FY24 as against 29.77 in 9 months of previous year, a YY growth of 13.36%. The PAT margin stood at 4.02%. Moving on to the breakup of revenue as per the business divisions, the industrial switchgear division contributed 54.80% to the overall revenue, in this quarter and 55.03% in the 9-month FY24. This business grew 3.5% YOY in Q3 FY24 and 14.4% YOY in 9M FY24. The EBITDA margin for this business division stood at 14.60% in Q3 FY24 and 12.39% in 9M FY24. Margins improved almost 2 percentage points compared to the previous year. In Q3 FY24, our three-phase transformer sale was flat YOY. However, in 9M FY24, it grew at about 67.85%, and wire harness business grew 60.12% YOY and 52.77% in 9M FY24. The wires and cables division contributed nearly 39.02% to our revenue this quarter and 39.10% in 9M FY24. There is increase of 23.24% YOY in this division during the quarter and 18.73% in the 9-month period of FY24. EBITDA margin for this division stood at 8.13% in Q3 and 7.17% in 9 months. Again, a 2% improvement compared to the previous year, same period. The building products division has contributed 6.18% to revenue in this quarter and 5.87% in the 9 months. This business is the only B2C business that we have where we are all selling many electrical products for the building sector. Due to a higher sales outstanding, we are slowing down sales to specific distributors for this division, and also there is a reorganization of the team and channel which leads to improved growth trend in the coming quarters, is what we suppose, which will help us increase our contribution from this segment. On the exports front, this quarter, the export share of revenue was nearly 24.50%. For this 9 months, an export share of revenue was 27.69%. Growth in export was 26% YOY. However, in Q3 FY24, exports declined by about 5% YOY. Now that's all from my side. I would like to now hand over the call to Rajesh to take us through the business developments and way ahead. Over to you, Rajesh. Thank you.
Thank you very much, Amit. A very warm welcome to everyone for the Salzer Electronics Limited third quarter earnings conference call. Thank you all for taking time to join us today. I think the results have been shared, update presentation also have been shared. Hope you all must have gone through it. I would like to share some recent developments and the outlook for the future. As we are almost in the middle of Q4 and stepping into the fiscal year of 24-25, it's imperative to gain insights into the anticipated trajectory of the global market scenario. For us, I think with a very cautiously optimistic view, the market is poised to undergo moderate growth driven by several key factors. As economies rebound from various geopolitical tensions, a surge in investments is expected in various construction and infrastructure projects across the world, and particularly India. This will in turn escalate the demand for all electrical products, including wires and cables. Also, the global shift towards clean energy is fostering investments in the renewable energy projects. The widespread adoption of automation and smart technologies across industries is fueling demand for specialized electrical components, wires and cables that support high-speed data transmission and connectivity. Currently, the ongoing geopolitical tensions, exemplified by the US and Houthi Red Sea war, introduce new uncertainties that can disrupt global markets and supply chains, potentially leading to higher prices and shortage of raw materials. Escalating prices of key raw materials such as copper, aluminum, silver, plastics, etc. are exerting pressure on manufacturers' margin and could translate into higher prices for finished products. Following the COVID-19 pandemic, global supply chains have been disrupted by Russia-Ukraine conflict and then the Israel-Hamas war, and more recently the Red Sea disturbances. These events have exposed vulnerabilities in supply chains, leading to delays in deliveries and shortages of crucial components. This disruption poses a significant threat to the production and availability of various components and raw materials across the world. Now, coming to the key developments that has happened at Salzer in the last quarter. During this quarter, the overall market faced a slightly slow pace, especially in the industrial switchgear sector, influenced by global geopolitical uncertainties and economic slowdown in the US and Europe. Despite these challenges, our industrial switchgear business as well as the wires cable business grew. The notable increase in demand for wires and cables was mainly driven by both building wires and the agri-market cables. While the numbers reflect a slight slowdown sequentially in our growth, particularly in comparison to previous quarter, we remain confident in the long-term potential of the business. The increase in EBITDA and PAT, coupled with improved margins, underscores our ability to navigate challenges and capitalize on the opportunities. I'm also very happy to share an update for our joint venture company, Salzer EV Chargers Private Limited. The company has completed the development of DC fast chargers, which is suitable for various types of cars. The charger has almost completed the testing at the Automotive Research Institute in Pune, and we expect to launch and bring the product into sale in the current quarter. This strategic move not only solidifies our positions in the rapidly evolving electric vehicle charging industry, but also demonstrates our commitment to pushing the boundaries of technological advancements. We believe that this infusion of capital into this joint venture is not just a financial transaction, but a strategic step that aligns seamlessly with our long-term vision. Recently, we also secured a patent for our product, heavy-duty energy-efficient automatic changeover, which is listed in our building segment business. This patented innovation made its debut in the sales in 2016. This is a very precise solution crafted to effectively manage the distribution of generator power, the backup power, in the residential buildings. Its function is to help prevent overloading on the generator. This product has benefited in revenue generation of around 10 crore so far, and it is a high-end product that will help the company thrive in the future. As far as our subsidiary KC Industries Limited is concerned, the sales have been growing consistently and the EBITDA margins also improving. KC's top line grew 20% year-on-year to 12.3 crore in Q3 of this financial year from 10.2 crore in the last year. EBITDA grew 40% year-on-year to 1.62 crore in Q3 FY24 from 1.16 crore in the previous year third quarter. PAT margins are also at an impressive 8.59% this quarter, an improvement of 23% over the previous year Q3. As we approach the last quarter of this fiscal year, we acknowledge the increasing challenges and slight slowdown in the Indian markets as well as the Western markets. However, we are well positioned with a diverse product portfolio to continue the growth that we have been having. Our enduring partnerships with key global players also will provide stability during these challenging times. Looking ahead, we are optimistic about the medium to long-term prospects of the company despite near-term headwinds. We see significant potential for growth and value creation driven by our strategic initiatives like our foray into EV charging, along with diversification of products into various new sectors, one including the HVAC sector that we have done recently, and the renewable sectors. I thank my entire team at Salzer Electronics for their untiring efforts and all our stakeholders for their continued support and faith in our company. Thank you all once again for your support, and now let's take questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Ritesh Oswal, individual investor. Please go ahead.
Hello. Your Q3 revenue is 270 crore and inventory is 290 crore. As per industry standard, it should be below 100 crore because it's not a high margin business. Cost is 73%. Any reason for high inventory?
Our inventory days have remained almost same compared to what it was in March or September at 90 days. We have to, when we look at the inventories and the receivables, I think we have to annualize the sales. So it's basically 290 crores of inventory is for the annual revenues of approximately 1,100 that we might achieve.
Because there is fluctuation in metal, plastic, polymer. Nobody in industry maintaining such large inventory.
No, I think
unable to digest 290 crore inventory and 270 crore sales.
I think I repeat that. I think 270 crore is a 3-month sale.
Yeah, I know. 270 crore
but
is a 3 month.
We need to, as an industry, I think we have been consistently maintaining an inventory of close to actually 110 days, which is now reduced to 90 days. At the max, we will be able to reduce another 10 days of inventory.
Actually,
on the annual sales. So that's the industry standard for this business that we are doing.
Yeah, if you reforming in a supply chain, you can reduce up to till 30-40 days. So ROC will be increased.
It won't be possible, sir, because our process time for the production itself is close to around 30 to 45 days.
Yeah, I know from this. I know industry. Copper wire is a not long duration process. It's not chemical industry or construction industry. You need such a long inventory. Copper, because major raw material is your metal products. So it's okay. Okay, thank you very much.
Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Devansh Singla, individual investor. Please go ahead.
Hello.
Yes,
am I audible?
Yes, you are. Go ahead.
Yes. I wanted to ask, that the companies want to expand in charger business, in electrical vehicles. I want to ask, what are the risks from the swapping batteries? They are getting traction in the market right now.
You're asking, are we getting into swapping of batteries?
What are the risks of that? Like you are getting into the charger business. The swapping battery is getting more traction in the market right now with the new startups coming in.
Yes, sir. I think EV business is still evolving. I think there will be a lot of new technologies that will keep coming up. But looking at the most developed countries, what has happened over the last 4 to 5 years, I think the charging business will remain because swapping of batteries for four-wheelers and buses and trucks might not be an easy solution. So I think chargers will.
But we've seen countries like Vietnam, there is 90% of the charging is through swapping only.
Mostly for the two-wheelers.
Yes, in two-wheelers, yes.
Yeah, but whereas we are concentrating on a four-wheeler charging.
Okay.
Four-wheeler, buses and trucks.
Okay. Yes. Okay. Got it.
Yeah.
Thank you.
Thank you. Participants, you may press star and one to ask the question. The next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, good morning. Congratulations on good numbers.
Thank you, sir.
So my first question is regarding this.
Bala sir, sorry, but your voice is not coming clearly.
Yeah. My first question is regarding the DC chargers. So we are going to launch in this quarter. So do we have any orders in place to supply or any talks with any other customers for the immediate revenue potential?
We don't have an orders in hand, but we are in talks with multiple potential charge point operators in the country to give our chargers for evaluation and supply.
Oh, okay, sir. And so what could be the potential of this segment if they scale up fully ramp up production of the chargers? So in FY25, FY26, what could be the revenue potential from this charger?
It is very, very difficult to estimate the revenue potential for a product like this because of the way that the market is operating at this point. But the potential is immense. We see the total market size to be close to 2 lakh chargers in the country over a period of next 3-4 years. So 2 lakh chargers means it's kind of more, I would say each charger will be costing anywhere between 7 to 10 lakhs is the cost of the charger. Then you can imagine the market size. So that's the market size that we are seeing in the country. But what revenue the company can generate in the next 2 to 3 years is very difficult to estimate at this point of time. Maybe a couple of quarters down the line, we will be in a better position to say where we stand. As far as the capacity is concerned, we have a capacity to produce 100 chargers a month at this point of time.
Okay, understood, sir. And regarding the margins, do you see any uptick in the upcoming quarters because of the softening of this metal prices?
Yes, I think we have seen. I think we are back at 11% plus EBITDA margin levels as of now, and I think this will continue for the Q4. And going into the next quarter, we might see some improvement further on this.
Okay, that's all. Thank you, sir. All the best.
Thank you, sir.
Thank you. Next question is from the line of Senthil Kumar from Joindre Capital. Please go ahead.
Good morning, sir. Am I audible?
Your voice is coming a little muffled. Can you please speak through the handset?
Yeah, I'm using handset. Sir, my first question is, what is our freight cost for this quarter, sir? I'm asking this in the context of Red Sea issue. Do we face any impact due to this Red Sea issue?
You're talking about the freight cost, the outbound and inbound freight cost, correct?
Yes, sir. Yes, sir. Correct.
I'll have to take a look at it. Yeah, I think it has definitely increased. Not increased, I would say it has remained flat compared to year before last year. Last year 9 months and this year 9 months. More or less it has remained flat.
Okay. So right now we are not facing any challenge in supply chain. Am I right?
I think whatever is happening now will get reflected in the coming quarter.
Okay, sir. I understand that. And my second question is, I could see there is a 29% degrowth in revenue from Asia region on sequential basis. Any particular reason for that, sir? No, because we don't have any supply chain issues in the Asia region, right?
You're talking about the export revenue, right?
Yeah. On sequential basis, particularly on Asia region.
Yeah. Yes, I think it is not 29. I think it is 19% Asia. It has declined. Overall, our exports have declined considerably in this quarter sequentially. I think we are seeing a complete slowdown in US and Europe mainly because of I think that impact is having an impact across the world. That is the reason that we are seeing a slowdown in overall all markets. I think Middle East for us has declined. Asia, Europe, all markets have declined in this quarter. Sequentially. But year-on-year in 9 months, I think we are still flat, I would say, compared to last year.
Okay. Do we see any recovery side?
We will have to wait and watch because I think it's the election year in many countries, and the information that we hear from our customers, particularly from US, is that the markets are not that very good. Until 6 months September, things are actually not bad. But now I think they feel the heat, and then looks like the markets are slowing down in US.
Okay.
So we will have to wait to see when this can improve.
Okay.
I expect that it will continue like this in Q4, and maybe we can see some improvement from Q1 next fiscal.
Okay, understood. And lastly, what is our gross debt as on December 2023, sir? Gross debt.
200 it remains as it is like last quarter at 280 crores.
This includes the term loan, right?
No, term loan is additional 9 crores.
Oh, 9 crores. Okay. Okay, so that's it from my side. I will join the class. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Vipin Abraham from Intergrid Technologies Private Limited. Please go ahead.
Hi, congratulations on a good set of numbers. So the question I want to ask is that
Sir,
the building segment.
Can you speak a little louder, please?
Yeah. So the building segment revenue for the 9 months has come down from 7.8% of the overall business to around 5.9%. And I understood that you have reduced it purposely because you are facing collection issues. So if this segment is a very profitable one, then what are we trying to do about it to make the changes and improve that business segment?
I think as we mentioned in the call, we are trying to reorganize a little bit both our team as well as the channel. I think since being a retail business, and in the retail business, we not being a very, very strong brand as of today, we are definitely facing some collection issues with the specific distributors. So that's one of the reasons that we have specifically not gone very aggressive on sales. And the result is that I think the sales is stagnating at around 16 crores for the last 4 or 5 quarters. Idea is to ensure that we don't lose money because of collection issues. At the same time, we are trying to improve on the quality of the distributors and also trying to see how we can approach the customers directly to do this business. So those are the things that we are doing. Hopefully, from next fiscal onwards, we will see growth coming in. However, I would like to mention here that if you look at a year ago, FY22 to FY23, I think we have seen close to 60% growth, almost 55% growth. So that means we are already operating on a higher base for FY24. So we have to stabilize a little bit in this year before we continue to grow at the same pace.
Right. Thank you. Just one more question. What would be your guidance approximately for the next year in revenue?
For building segment or overall company?
Overall.
I think this year itself, our guidance when we started this year was close to 20%. However, I think on a consolidated basis, we see we are growing at around 14% as of now, though the profitability has improved. We expect that we will close this year at close to around 14-15% growth. Next year, we expect that most of the headwinds that we are facing now will be over, and with whatever we have done, work we have done in this year can give us a growth of anywhere between 18 to 20% for next year.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from the line of Rohit Dubey from RD Capital Group. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir.
Thanks for taking my question. So I have a question regarding the business potential. So when we talk about the growth in future and margin improvement, may I know how much is dependent upon the external factors like, fall in raw material and industry growth, and how much is dependent upon the efforts that we are making? And I would also like to understand the efforts that we are making as a company to improve our sales and ROC.
I think the external factors might impact our top line growth. If there are major untoward incidents that can happen across the world, the economy is not growing like they expect US to go into recession, but it has not really gone into recession, but there's a slowdown. Those kind of things might definitely impact the top line growth. However, I would like to stress that as a company, we are quite spread out. There's no concentration of business for us in any country or with any customer beyond 8% at the max today on the total revenues. So that gives us a very good spread for us. But if we see a volume growth of close to 20-25%, then we can expect a good margin improvement on the EBITDA levels. So.
One follow-up question, sorry, if I may.
Sorry?
One follow-up question regarding this.
Yeah,
you mentioned 20-25% growth you might see. So what will be the catalyst for that growth? I would like to understand that.
I think basically our products are used in the infrastructure. So basically the infra growth will fuel demand for all our products.
Okay, so mostly dependent upon the industry. Okay, thank you for answering my question.
Yeah.
Thank you. Next question is from the line of Pranay Gandhi from Green Portfolio. Please go ahead.
Hi, good afternoon, sir. Sir, I would firstly want to touch base back with the EV charger side of the business. Previously, the management was contemplating on the business plan, and I believe, as you just mentioned, that we are looking to supply it to charge point operators.
Mm-hmm.
So, with that side of business, have you totally closed the other angle where you were looking to set up your own infrastructure and charge points?
No, we have not closed it, but our focus right now is to establish the product quality and the reliability. So we will continue. We will start doing sales of the product to charge point operators in the first phase. At the same time, I think we are also exploring to see how we can become a large charge point operator. I think that business is has a different dynamics than to manufacturing, because we are completely shifting the whole scenario from a manufacturing company to a service providing company, and which needs enormous capital, which needs a complete different dynamics. But we are not closing the chapter. We are keeping it open, and we are exploring that. Okay.
And sir, what is the per piece cost of these EV chargers, and how many kilowatts are we talking about?
Our capability is to produce starting 30 kilowatts and go up to 240 kilowatts in multiples of 30 kilowatts. Pricing, I think the 30 kilowatt will be anywhere between 5 to 6 lakhs, and 60 kilowatt will charge between 10, 11 lakhs, and going upwards like that.
Okay. And I believe since the current capacity is 1,200 units, so even with 30 kilowatts, if we consider, it gives a top line of around 70 crores. And I understand the fact that we are just going to test it in this quarter itself. But how do you see it growing, considering the fact, as you had already mentioned, that there's immense potential on this side of the business from 70 CR, and I understand previously you have mentioned that it has the potential for the company to reach 500 CR. So, firstly, if you have to expand the manufacturing capacity, how much would it cost? And if you could just explain the matrix, and how do you see it, the growth moving forward in this side of the business?
My opinion, I think this is not a very high capex intensive industry. This is a more technology-oriented product. As you rightly said, if we do all 30 kilowatt, there are 70 crore revenue capacity as of now. Or if we do all 60 kilowatt, actually we always keep 60 as a benchmark parameter. 60 kilowatt if we do, then it's 120 crore revenue capacity that we have as of now. So to take it 5 times more, we expect that there should be a capex of between 70 to 100 crores at the max. At the maximum level I'm talking about. It has to be lower than this to achieve a 500 to 600 crore top line.
Okay. And if probably in the future, if the company decides to set up its own infrastructure, what would be the expenditure related to it?
Okay, that's a whole different ball game. You mean to say that when we become our own charge point operators, correct?
Yes. Yes.
Yeah, that's a whole different ball game, because if suppose you want to install 1,000 chargers at 10 lakhs, then you know how much it works out to. So it's close to 100 crore investment, and 1,000 chargers as a charge point operator is a very small quantity.
Okay.
So that's a whole different ball game that we are looking at. That should be done. We would like to become a charge point operator, but then when we come to that stage, I think we will make a plan, and I expect that we will do that through a subsidiary of the company, through a different subsidiary of the company.
Fair enough, sir. So one final question. Previously, you have mentioned that the ideal case scenario target would be doubling the top line in next 3 years. So with the current product portfolio that we have, do you think that sort of revenue is achievable, considering the fact that this year we'll be doing 14% and the next year would be 18%? Doubling the revenue over the next 3 to 4 years seems far-fetched as of now.
I really don't see it as a big challenge. Definitely, I think we are constantly doing a lot of things, getting new products into the line, adding new customer sectors as our customers. So that's a constant work that we are doing. We are still confident to double our business from 1,000 last year, FY23 to 2,000. I didn't say 3 years. I think 3 to 4 years was our target. So internally we have a 3, but we would like to commit 4. So definitely, I think in 4 years from last year, we will definitely. We are still confident that we will be able to double this with whatever we are doing now.
Perfect. That's it from my side, sir. Thank you so much for answering the question.
Thank you. Next question is from the line of Devansh Singla, individual investor. Please go ahead. Devansh, may I request you to unmute your line and go ahead with the question, please? Due to no response, we move on to the next participant. Next question is from the line of Mohit Doshi, individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
Yes.
So hi, sir. Actually, I had just 3 questions. So actually, in this quarter, the wires and cables division grew, pretty at a robust growth. So could you please let us know if this was, basically due to a particular product or any, just a random reason?
No, I think wire and cable business have not been growing very well in the last few quarters because of various reasons, which has again found its place. And I think the agri-market cables in this quarter, it's also a seasonal quarter. It's one of the reasons that it has grown well this quarter. And year on year also, I think last year was not a great year for entire agri cables. So because of that, year on year also we see 18% growth. And most of this growth is because of volumes and not in price.
Okay. And sir, second question was related to interest rates. So it has finance cost has been up by almost 4.8% quarter on quarter and almost 30% year on year. So is there any particular reason, or it's just for working capital that is it's being used?
There are there are two things that has happened. One, I think the overall borrowing also has gone up by around 20 crores compared to last financial year. That is one. Secondly, the interest rates in India have gone up by around 1.5%, Indian rupee interest rates. And also the dollar interest rates have gone up by close to 2 to 2.5%. I think that is the impact that we are seeing in the finance cost.
Okay, sir. And just one last question. So, sorry, it might have been repeated. So it's the year-on-year growth in the EBITDA and EBITDA margin has been about 24% and 120 dips almost respectively. So any particular reasons for those numbers?
I think in this quarter, if you see, we have considerably reduced the raw material cost. I think that is the main reason for the increased EBITDA margin. And it's happened because of the constant reduction in material cost that we have been working on, and also the increase in sale price to close to around 3% that we have got the last several quarters.
Certainly, fair enough, sir. That's it from my side.
Yeah.
Thank you.
Thank you. Next question is from the line of Devansh Singla, individual investor. Please go ahead.
Yes, am I audible?
Yes.
Yes, I have recently started tracking this company. I am very interested in this EV business. I had the question before also.
Your voice is not very clear.
Not coming clear. Can you please speak through the handset?
Okay, yes. Am I audible now?
Yeah.
Yes, I wanted to know if you are just thinking of any partnership with four-wheelers or commercial vehicle manufacturers like Tata or Mahindra?
No, I think we have not really worked on that. But at the same time, we also don't see a big potential that the automotive makers will get into partnership with the charging manufacturers, because that.
No, like that now there is a Blue Smart. They are having four-wheeler taxis. They are having their own fleet of charging stations.
Like that's a different story. I'm talking about the automobile manufacturers. I don't think they will be interested in any chargers of the kind that we are making. But yes, the fleet operators might. Right.
Yes, you can act as a fleet operator and
fleet operators. Yes, right. They are potential customers.
Yes, like different automobile manufacturers have their different patents for chargers. Like there in mobiles, micro USB Type-C, there are different chargers for EVs. Like Ola and Ather in two-wheelers, they are having different chargers.
We are not into two-wheeler chargers. We are not getting into two-wheeler chargers. We are only into the four-wheeler buses and truck chargers.
Okay, so your charging stations will have pin for these automobile manufacturers. The charging pins, you will be compatible with those.
Yes, with all the cars.
Okay, but there will be no partnership with these fundamental partnership.
No, not required to be.
Okay. Thank you.
Thank you. Next follow-up question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, thanks for the opportunity again. Could you please update on this wholesale plant?
Bala, your voice is not coming clearly.
Just a minute.
Hi, thanks for the follow-up question. Could you please update on the wholesale plant capacity utilization levels as of now and this cable harness business?
I think on an average, all of the plants are currently operating at around 70% capacity.
Okay. So, and the EV chargers are start. So, I think the EV Trans is the biggest operator as of now because they are covering the entire Mumbai region. So, are we in the talks with them for the chargers? So,
Which company?
EV Trans, which is a collaborated subsidiary of Electra. So, they have around 9,000 buses order from the Mumbai suburban area.
No, we are not in touch with them as of now. But maybe I have noted.
So Electra is going to supply approximately 8,000 buses to the Mumbai region. So they are the EV Trans is the operator. So better maybe you can get some opportunity over there.
Yeah, definitely. I have noted down. And thanks for this information.
Yes, sir. And lastly, on this, so
in this FY25, so we are starting with the 30 kilowatt chargers. So we can expect some higher kilowatt charges in the FY25 itself, or maybe it will take some time to get those charges.
No, we are already ready with 30, 60, and 90. We can produce this up to 90 right now, and we can also produce 120 and 240 in a couple of months' time.
Okay, thank you. That's all.
Thank you. Next question is from the line of Nikhil Gupta, individual investor. Please go ahead.
Yeah, hello. Congratulations on the good set of numbers. Sir, the wire and cable divisions have grown approximately 23 to 25% in this quarter. So I just wanted to understand that which products, particularly in this segment, have contributed to this growth. If you can help me out.
Yes, I think the top line growth has come mainly because of the wire and cable, because the switchgear business division has only grown around 4%, but the wire and cable division has grown around 23%. So the overall growth of 10% is mainly because of the wire and cable in terms of revenues. However, in terms of profitability, if you see, I think our EBITDA in the switchgear division in this quarter has gone up to around 14.5% compared to 12.5% or 12.8% in the previous year. And actually, sequential quarter, it was only around 11.5%. So there is a substantial improvement in the EBITDA margins of the switchgear division. On the wire and cable also, we are seeing improvement in the EBITDA margin close to around 1 percentage point year on year as well as sequentially.
Oh, okay. That's great to know, sir. Also, the exports have, declined sequentially. So is this specifically due to the geopolitical tension or any other reason?
No, I think it is a combination of both, geopolitical tensions as well as the general slowdown in the Western markets because of the inflation, which they have been talking for many quarters now. I think we are really seeing it right now.
Okay, got it, sir. Sir, and if we focus on the growth and expansion phase, so any key geographical market or regions that we are targeting upon to reach?
We are working on various new products and markets. I think we were targeting the Australia, New Zealand market for the last year, which we have secured some good business there, which we will see the benefits of that. We are seeing this year, and it will continue to grow next year. Next is, I think we are also focusing on Saudi Arabia and also many other Middle Eastern countries where we are seeing potentially high growth in the coming years.
Okay, so that's great to know. So one last bookkeeping question from my side. So what are the inventory debtors and creditors days as of December, if you could help me?
Sorry, say that again.
What are the inventory debtors and creditors days as of December, if you could help me?
Inventory, as I think I just mentioned to the first one. Yeah. Inventory days are at around 91 days right now, same as 91 days in September. Receivable days are at 94 compared to 96 in September.
Okay, fair enough, sir. Thank you, and sorry you had to repeat the answer, and all the best for future.
No problem, sir. Thank you.
Thank you. The next question is from the line of Nihar Mehta, individual investor. Please go ahead.
Hi, sir. Good afternoon. I noticed on the revenue part, there was an increase. I have joined late. If you could reiterate what are the key drivers for our revenue growth, but also mentioning as it has increased somewhere around 9%, but it also been dropped by 4.1% sequentially. So if you could highlight reasons for that.
Yeah, good afternoon, sir. I think our revenues increased consolidated 10% compared to previous year. And quarter on quarter, it has declined 4%.
Yeah.
This year-on-year revenue increase in the business divisions, if you see, our switchgear division increased around 4% compared to last year, third quarter. And wire and cable increased 23% compared to last year, third quarter. So primarily, the 10% increase has come because of the good business that we have secured from wire and cable industry on the revenue front.
Also on the employee expenses side, have you hired or are you planning to extend your human capital in terms of team building? Because I saw there was a significant increase on a YOY basis in terms of employee expenses.
Yes, I think we have a year-on-year increment that we give. So that has been accounted for. And of course, new additions, new team, and new people in place. So these are the two reasons for increase in the overall employee cost.
Okay.
However, the cost of employment in terms of percentage to sales remains at around 3.5%.
Okay. And also, I observed that there is a small reduction in our raw material prices. So, is it? Are we purchasing the raw materials in bulk just because we are getting it at a lower price, or how it is, or impacting our revenue?
Overall, I think post the pandemic scenario, the raw material prices started dropping. Which I think the impact of which is now being seen, one. And secondly, the increase in our sale prices to some extent, on an average around 3% increase, is also having an impact on the reduced consumption.
And what all is included in the other income? Because I saw a significant jump in that line item also. So if you could highlight.
Yeah, sure. The other income mainly includes dividend received from our investments and the foreign exchange rate difference, and also some investment profit on sale of investments.
Understood. That is all from me, sir. Thank you, and wish you the very best.
Thank you, sir.
Thank you. The next question is from the line of Parth Patel, NHNI. Please go ahead.
Hi, sir. Good afternoon. Sir, wanted to understand when will the switchgear, when do you expect the switchgear business growth to again pick up? And secondly, on the wire and cable side, do you expect similar growth to continue?
Wire and cable, yes, I think we will hopefully continue to grow at around between 15 and 20%. That's what we expect for the full year, as well as for the next few quarters. Switchgear, ideally speaking, it has to grow 15-20% year on year. But for our decline in exports and also a slowdown in the Indian market. So we think Q4 might also be a little bit similar to what we saw in Q3, or a little better than Q3. But going forward for next year, we definitely expect the overall business to grow at 18 to 20%.
Got it, sir. And just a follow-up question on that. So in India, as such, I mean, we are hearing a lot on the infrastructure side, and a lot of projects, etc., are also picking up. I do understand with upcoming elections, some of them might be stalled or delayed. But is it linked to the infra activity in India, because that seems to be doing well?
Yes.
So
It's
why do you say
linked to the infra activity? So as I said, I think last year we had a very good growth on the switchgear business. Close to around 33-34% growth on the switchgear business. So that means that we are looking at a higher base and then growing it from further at that base onwards. And particularly last year, Q3 and Q4 was a very good quarter for switchgear industry, switchgear business for us. So again, we are looking at a higher base and trying to grow from there. So that's where the growth percentage is coming down for this quarters. But nevertheless, I think we will definitely get back to around 15-20% growth rate in switchgear industry in the coming quarters for next year.
Got it, sir. Thank you. And on the EV charging side, sir, in last phone call, you were mentioning that you are looking at the GTM approaches. So whether to partner with someone or go direct to the consumer, etc. So have you finalized the roadmap as to how you are going to roll it out in the next 1 or 2 years?
No, I think as I just mentioned in the call, we will first start try and sell the chargers to the charge point operators and various customers who would like to buy and install. That will be the first phase of business that we will do from this company. Secondly, we will also try and explore how we can become a charge point operator.
Got it. Thank you, sir. And so sorry I joined late, so you had to repeat that. I'll just go through the Concall notes again. Thank you, sir.
No problem, sir. Thank you.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Mr. Rajesh Doraiswamy for closing comments.
Thank you very much, all of you, for your interest in the company. Looking forward to interact with you again for the next quarter. Thank you all.
Thank you very much. On behalf of Progressive Shares, that concludes this conference. Thank you for joining us. You may now disconnect your lines.